Good afternoon. Welcome to OptionsTender. It's Thursday, May 1st, 2025. We're going to take a look just on the weekly time frame of, we're really keying in on the kiss of death scenario. So I want to look at a couple bear markets and show you what this might look like, and then we'll go to present time and see where we are now. It's an important situation to see what this market is capable of, and we can sort of track this and be able to trade. So we did go short today, been scaling into a few shorts the last few days, getting to the 50% retracement, and now we're into some naked puts as well. So the in-out spread, I'll put that video up top. It has been working perfect for us, 100% since we started posting them in the Discord under trade alerts. And so I want you to see that video if you're interested in a set it and forget it type trade that closes. You set the trade and then you set the good till canceled sell, and you just let it ride. Okay, so let's jump into it. We're doing this intraday, almost 1 p.m. Eastern Standard Time. If you want to get these videos intraday, maybe I'll help out with some decisions that you make, and you can compare it to your own work. And that's 99 cents a month. So consider that. It comes with the Discord and those trade alerts, especially those in-out spreads, 100% so far. All right, so we're in SPX on the weekly time frame. This is 1929. It's the top here. We had the initial crash. We had a crash recently in the near term too. So why not compare it to here? And you see an ABC correction that just sort of regained the 20 moving average on the weekly time frame. That's our trend indicator, and this is the most important moving average that we look at for bulls and bear markets for trends. Okay, so price got back up there, rejected off the 50, and then broke back down from the 20 moving average. Okay, now after the continuation to the downside, you had the kiss of death. Okay, this wasn't. We got above, broke down, kiss of death, continuation. All right, and then riding down the 20 the whole time. Let's look at another example. Let's go to the 60s. This I'll pull out just a little bit so you can see this diamond shape sideways correction that happened for decades, and you can see we have a bear market, a bull market, a bear market, a bull, and a bear, constantly making lower lows and higher highs. Very interesting correction, but all in all, just sideways correction. Okay, so let's look at these examples. We can see, I'll dig into each one. After breaking down from the 20 moving average on the weekly, had the kiss of death and continued the breakdown. All right, that was a very simple one, and you can see the retracement. Pull out the retracement tool. We're looking at the 62% retracement and then tagging the 786 right above it. All right, you can see the thicker line for the 62. The thinner line right above is the 786. So it was managed to tag, but you could see that zone that it got to. So very simple, breakdown, backtest, and crash. Okay, this one was more complex. So that's the question we're going to look when we get to the near term. This is all going to make sense. Did we have that simple retracement that went to the 786 and the 62 zone, or do you have this initial crash here and we have a B that tested the lows? That's what I've been talking about in all these past videos, and then the C wave for a larger correction that wastes more time. I think this is a more likely scenario, but we have to be on lookout that it could simply be a crash, kiss of death, and goodbye. All right, so you can see this one broke down from the 20, back tested, but didn't break new lows. Okay, we got back above and then broke down, and that's when you had your kiss of death. boom, boom, boom. See you later. All right, so that one's more complex. That looks very similar to 2000 as well. So that's my usual reference. Here, broke down. I wouldn't have considered this a kiss of death because we didn't really get anywhere from there. But back testing it twice here, you know, I can't say that that's not the whole meaning of it, and just continued to break down. Very choppy move here. And then pretty much couldn't hold over that 20 moving average after it started curling lower. So price got above it, but couldn't hold it. What's another example? Let's go to 2000. And then we'll do one more. So this one was very similar to the one we just looked at, where you had a more complex move. So once you got the initial move down, so from the highs to the lows, we retraced back to the 62% here, the golden ratio, and then broke down to test the lows, very similar to what I think is going to happen. And then just kept beating on that 62% retracement, got to the 786. You know, at that point, I would have, thought we'd have broke down from there. But you notice it's just holding these moving averages. I'll remove this in a second. And then we got all the way up to the 887, the 883 retracement here. So very, very deep in such a long period of time for correction. From top to bottom, 140 days of a correction. You know, that's over 4 months here. So removing those and just looking at the moving averages, I think we're in a different shape. Okay, all of these rhyme. They're not all the same. The moving averages, we're just chopping around it in a bear flag. And so tried to hold on to that 20, held on to the 50, 20, 50 over and over, and just couldn't stay above it, and finally broke down when it established a trend line here for a flag. All right. So that's a really good example. Again, I don't know if it's going to be that long of and deep of a retracement, but we have to be ready for that. I think this move, because of timing cycles, and if you're interested in that, we have I did a couple videos in the past here and updated them for the $4.99 members monthly, and we talked about the cycles, and I think that's good reason to believe that our correction isn't over, but we'll have to watch these moving averages. So this is the last example that we're going to show you here. Made a new high, broke down, tried to hold the 20 moving average, kiss of death, and broke down. Okay, and then constantly tries to hold above it with a 50. Everything's curling down. 50 held at that time and never looked back. Okay, so what about now? So we had our initial move down already. We're getting above that 8 EMA, the momentum indicator, and we're going to test the 50. So in any of these examples, we don't have to actually tag the moving average, but it leaves us, to believe there may be some unfinished business. Now the 20 is already curling down, but we haven't tagged it. We haven't had a kiss of death here yet. And so I do think this is going to occur. It may not occur right now. I think right now we're going to follow the plan of a B wave headed to test the lows. And when you're in a B wave, you can make a new low and it still be considered an expanded flat. So just be careful of that. It can make a higher low, it can make a lower low, and then the C wave should be a nice 5-wave move. Wave. And so looking at this in the daily time frame, by then the 20 will be lower, right? And so we'll tag it and possibly, like that first example, get above the 20 before breaking down. That'll be the kiss of death. And so let's interpret this on the other time frames here. Okay, so it's very similar to, so SPX I'm going to leave with this trend line holding the lows. So this says we don't make new lows. That doesn't mean it's going to hold, but we're going to use this for reference on SPX. But then on SPY, I'm going to leave that big target box range for if price does break down for a new low. I think it'll catch a bid pretty quickly and a spike through it. So I'll leave both examples, but on this daily time frame, the reason why I made this big red box here is just in case we want to make a more complex correction. So we haven't tagged that 200 moving average yet. Again, we don't have to. It's going to start curling down eventually. You see the 100 breaking down. We're in just a nice firm spot here if you don't have anything to reference. You know, price action is above the 8 EMA, so momentum's up. The 20 still facing lower, but we're above it, right? So we're in this firm to neutral type position. We're above the 50. So be it. If price action continues to consolidate and just go sideways and lets these moving averages kind of converge or start to curl up, you start holding those moving averages, then you know we can start to have this bullish case. Now, with the overhead here, can we go with we have earnings for Amazon and Apple coming up tonight, and don't forget MicroStrategies. That's coming out tonight as well. That does have a good influence with peripherals of Bitcoin. So those could be some sympathy plays if there's some bullish or bearishness to it. And it really, I think it does have an effect on the market overall. So we'll be looking at those three. And if it spikes the market up overnight and we get to this 200, great. Then it was our direct movement, our direct scenario to the 200 moving average on the daily, and also that zone where the 20-week moving average is. That's an objective short there. Now, I do believe that this is also. So that's why we have call protection on for the end of the week for that protection. And then we'll have our primary swing trades already established, and we'll add on to those if price does make it up here going into Friday. Okay, so where are we at right now? Why are we getting a doji candle? We're getting a little bit of resistance here, not only because this was, you know, literally the V shape right here for the crash, but we're making a lower high at this point. And also we had these former consolidation areas. So this was our initial bounce zone that the price did get the bounce and then crashed underneath it. All right, broke down from it, back tested, traded through it, and then broke down. So we're back at that zone. We're at the top of it, and that's an objective short in itself. And I'll show you why also on the on SPY for our retracements. Okay, so let's go ahead and look at the McClellan oscillator. Once again, we made new highs, so we're stretching out this negative divergence. I think the turnaround here is imminent. We have a sell signal, and it's a perfect spot if you have a smaller account or you want to be very conservative on a turn. Here's an in-out spread opportunity right here, right now, today. So check that video out. We have the OptionsTender setup for the MACD RSI. It's a very common setup. It's not mine, but I just call it that. So we're back to the neutral point here on the MACD. That could be a perfect spot to curl over in a bear market. You stay within these realms here. Sometimes you get whipsaws. And also, this is no longer a good downtrend. Breaking out from there, we're in the overbought conditions into resistance. And we have the slow stoke finally starting to cross over, even though we made that higher high there. And I think that's going to cause the market to curl and turn over. All right, DMARC. We're all the way up to a 7. So do we have 2 more days of higher or consolidation? Very possible. This is our big zone here that we can get all the way up to 5866 and still be capable of going lower at this time. If this is a bear market that we think it is, we have our initial move here and we're just retracing. Is this going to be a simple retracement right here and we make new lows and the market drops from here? Or are we going to make a more complex correction and this be more of a flat pattern at that point? Awesome oscillator. Still getting into that positive territory. Is this a downtrend where we're just getting to that? Could be. I left these available just to see if we're going to get positive divergence if we eke out a new low. All right, let's go over to SPY. One of my favorite indicators here is so first of all, in the traditional look, I left this box open. If price does want to break down for expanded flat for a B wave new low, this is our zone that we have to be careful about being short in. Let's put on our divergences so we can look at this money flow. Put on a new board here. All right, and so our money flow index, if you are new here, we use this often, and it's a very good indicator for reversals. It has to do with volume. It's very similar to the RSI. Look it up. I think this is way more important. I love this indicator. And even though we're not into the overbought territory, we still have negative divergence right here. Again, unless maybe with earnings, we have very positive earnings that could get us in that overbought situation. This could continue to oscillate higher. Now, it has to be with conviction and volume. So that would bring our indicator up here. Otherwise, in a bear market, we could be making that negative divergence and we roll over from this point. We don't even have to get into an overbought territory. And with making new lows, we should still make another divergent low here, a higher low if price does make it down to that point. The Bollinger Bands, that's getting really close. Again, if we get up in the zone a little bit more, you'd get your sell signal. We don't have one yet, but if we do get a little bit higher, then we'll have this sell signal with a overbought RSI and a tag of the top of the Bollinger Band. So let's see that. We'll check that again tomorrow. Volume shelf, Elliott oscillator, no need. Okay, so again, let's do timing first. Let's see. So again, from yesterday, we're looking at this cluster here. I said, are we going to make a top here? Well, I think that's the scenario. Do we have the top today? Possible, but we have earnings, so it's so important. This could gap up tomorrow and still be in this time cluster that goes to the 5th. We're in here from the 3rd, looks like from yesterday, April 30th to May 5th is our cluster. So even if we're a little bit higher here, we're looking for a top for this reversal. Changing boards. Here's our bearish look. And this tells us exactly this fib of spot where we could end this move here. So we had this bearish rising wedge. We broke down into this Fibonacci cluster down low, held on to that, and then broke above and held on to this next cluster. And we got all the way up to that 72% retracement. I'm going to take off the 50 here just to keep this nice and clean. So we're in the golden zone, getting a possible reversal here. Now, I think this is a potential high, and I do believe we'll retest the lows. Is that a higher low in this cluster here, or do we make it back to this cluster all the way here, which has some room to run all the way down to possible 470-ish? Okay, so the A, wherever this B will end, and to be quite honest, if things want to get wacky, this B wave can become a triangle too. So it can be flats within flats, but overall, just to keep this simple, we have an A, we have a B, and we're looking for a C that might bring us to that 786, or maybe it just peaks right back through here. If we get a nice low B, and we can have a symmetrical A, B where it makes a slight higher low, and then a C that makes a slight higher high that is a 100% to A to C. That's a possibility that we just peak above here and then we break down. But do not do not underestimate things. We can, this is an ABC. This could be done. B wave here. This could be done, and we continue our descent lower. And this is a possible A into B or a 1, 2. It's the same setup. So 1, 2, 3, 4, 5, or A, B, and then a 5-wave move down for C. Okay, so moving on. We have the Qs. I was experimenting with this trend here. That's not the case. We'll take that out. And this can still be redrawn as a wedge up as well. I know you can just redraw lines and everything's dandy, but whatever, we'll leave this here. Either way, we're forming some sort of wedge, and we'll, in hindsight, you can draw it perfectly. And I do think this will break down at any point. So we do have a little bit of range higher. This was we're at resistance right now from former resistance here. And we could trade a little bit higher. We have another one up at 494 as well. Okay, and then, but important to look at on this one is we're at the 62% retracement already. And I'm not sure that we actually tagged it. So 487.18 is the high for today. We did not get to that 487.93. So that's unfinished business. Do we get it now or do we get it later? That could be our first clue that we're breaking down early from it and then we go tag it later or exceed it a little bit. SMH, to me, still looks like this wants to be 1, 2, 3, 4, 5 for leading diagonal. Maybe we get new lows. It's very skeptical how this move is. I don't think this is just a simple A, B, C, and then we get brand new highs. That doesn't fit. It looks weaker. It's holding down much weaker, and we're getting some sort of, we could draw this as a wedge now as well, but will this go up a little bit higher first? That's what we're going to have to figure out. I didn't update all the Fibonacci's, but if this is a wave 4, we're over to 382. But remember, this is a leading diagonal that we're looking at here, so it's still possible you can get to that 50% as well. IWM, sort of in the same stance here. I could redraw this channel a little bit higher so it hits these. Something similar to that. There's we can adjust it, but still, and with lower highs, we're in this wedge as well. We're holding right above that 382, so this is still in the same position where we could break down from here. Or do we want to tag the top of the range? But this is still, it still has the potential, in my opinion, where there's a 1, 2, 3, wave 4 is this wedge, and we're looking for a new low. Now the other markets don't have to do that. But what would happen here is that would be our impulse wave, and maybe we can expanded B on the Qs and SPY, and then this will probably get some sort of sharp zigzag, while the other ones have a 5-wave move. They'll look very similar. All right, and this channel is pretty much the same thing, drawn a little bit better with these highs. And we're rejecting off of it so far, and you can redraw this as a large wedge as well now. And maybe new lows. It does look similar, so we'll look out for that. And the VIX. All right, we had to widen our wedge because price action made a new low. It's a divergent low. Let's see if we can see it on the daily. We might see a little bit on RSI, starting to curl up on the slow stochastic. We're on the ideal day to day for a low, so that could be our hammer low, and we break out from this wedge. Now, why did we extend the wedge? Because we got a new low, and now we're going to go up to the top of this candle here. All right, so again, there's a little bit higher, so maybe the market, again, wants to gap up a little bit higher tomorrow, and then there's some support here at the 23 area. And 24 might be some support. It might be zone, actually. Yeah, you have two candles. You have a candle high here for 24 and a candle high here to get a reversal as well, right at 24. So we're in the zone for a reversal, but we do have some room just a little bit lower. Okay, anything extra that we want to look at? We looked at MJ yesterday. Let's look at BTC. And just continuing a massive move. I do believe at this point that if this gets a pullback and the rest of the market gets a pullback, we're probably going to make a higher low, either off of the trend line of this entire zone that could make a higher low, and then we'll have an opportunity to get into some of the plays here. And hopefully MicroStrategy's dips and we'll be able to buy the dip. I'm not bearish at all on Bitcoin MicroStrategies. Let's take a look at MSTR. So the earnings are coming up here. We're overextended. I didn't show you on Bitcoin, but we have negative divergence here. So we just got our first negative divergence in the money flow. We're extremely overbought. I put these arrows on there way before, so I didn't think it'd just continue to extend, but I think we're getting an initial wave up. And we'll get some sort of pullback, maybe the back test. We'll see where this, maybe it gaps down and hits the breakout zone. It'd be a perfect scenario for us to go long, and I think this goes to new highs. And let's go down to SPY. And we're continuously going over the scenarios. I think the primary scenarios here, okay, we have to adjust our wedge there, the A, and here's the B, and here's the C. Now, it'll probably take a lot longer in time-wise than this, but I think that's the scenario. We go to the 65-minute. So you can even leave your wedge here, and if you break back down from the wedge, you can consider that a fake break. Okay, so we're right at that 62% retracement. So far, rejection off of it. I believe this will head lower into some of these retracements, and this is if we get a higher low. And so SPX, that's the scenario we left on there, and then we get our 5-wave move up. And it doesn't have to, now that we already tagged the 62%, it doesn't have to be just a direct 5-wave move. It can, but if it wants to be shallow and just, it got a new high here, losing momentum, it can be an ending diagonal too. It can be real choppy and messy, but it would ride the moving averages. So let's see if we get a pullback first. And I know that some of you guys are going to say, well, which one is it? Is it, tell me which way it's going. It's not how it happens. We're already short because of this objective short here, but if we get above here and stay above, then we'll have this alternate scenario where we barely pulled back anyway. We have our A complete, B, and we're already in that C wave where this is probably a 1, 2. 2 looks like it's in. We made a new high. We're getting this third wave movement that could be shorter than wave 1, and then we get a very narrow move here, and we could just grind up from earnings. All right, so after tech earnings, then we're going to look at IWM. All the small caps are going to start having their earnings, so if that propels the market, we could just continue to grind to the upside, and maybe our high comes into next Wednesday or near next Wednesday with FOMC. Okay, so that's going to be our catalyst, our biggest catalyst next week. All right, so if we do get our pullback, what if we make a new low? Well, that looks something like this. It's the same thing, just with a new low. It should be pretty brief for that low. All right. And then we have a bullish scenario that just continues. It looks the same, makes a higher low, and just continues to rip to the upside. And so our timing on the 65-minute, we had our cluster here from yesterday and today. And so is our top in today? Let's see. I'll take these off and we'll look for the next clusters. If price continues to go higher, we still have this next cluster in the 65 around FOMC. We'll just say it like that, around FOMC. Okay. Going to some of these indicators. Let's go to the traditional look. All right, we close the gap. We're close the gap here, or just about, and we're at the options expected move. So I can close this, and we have some gaps underneath us, plenty. 1, 2, 3. I got to put those in. I like to just make my gaps out of the box here and keep it gray. So you see the wedge is already moved. I was playing around with that wedge. Maybe we can go a little bit higher and tag that wedge up higher. And maybe that completes our move here. So it doesn't, I'm not using this as resistance. I'm just shaping out this move here. And it could be done today, have a little bit higher, just like SMH, just like the other ones that we could move here. But looking at the, first of all, the moving averages were above all. So, I mean, it's bullish on this time frame. If you're day trading, that's your upside, your more probable positions are to the upside with the trend. Calling oscillator. Let's see. Here's the MACD, crossed back over green, but now we have bearish divergence on the MACD. Okay, so very careful. Momentum is slowing and a turn is imminent. We got a correction here, and then we made a lower high on the RSI, or at least the Class B high here, which is an equal high. We're getting the curl on slow stoke, so prepare for some sort of correction again or reversal. DMARCs have been fun to look at. Now, these 9s have been marking tops and bottoms for quite some time here. And after making a new high, we have a 13 count now. So that's a 9, 9, 13 on this move here. And that's a sell signal all by itself combination. Awesome oscillator. Negative divergence. Uh-oh. Money flow. Negative divergence. Back in the overbought territory with divergence. That's a sell signal. Bollinger Band. Well inside that Bollinger Band with negative divergence, with overbought conditions. That's a sell signal. Volume shelf, Elliott oscillator. And we're probably in some volume here. Let me open up this chart here. Yeah, we're back to a volume shelf as well. Okay, you had this volume from the consolidation areas. We typically don't need to look at this, but it's a nice visual. It happened from the consolidation, a lot of trading there and trading in here as well. And so we're right back at that shelf. If you look at my crosshairs, it brings us right into the shelf. So again, another objective short, and then you have another one above. If we get through this one, it looks like 570, about 9 more points above would take us there. And so with that said, 970 gets us into the zone of that 200 moving average and the 20 week. And yeah, so we don't have to make it all the way to 786. We have those other spots too. But yeah, so 570 would be our next spot in the very near term if price breaks above today. QQQ. Again, unfinished business there. We'll see what happens. Yep. And so this is where I think it might be. Maybe we get a drop. Here's A. Maybe we go up and A ends at FOMC. Then I think it's more likely, the higher we go, the more likely I think the move is done, and that we go directly lower at that point. Okay, so let me make that clear. If we start to get past this 487 at anywhere at that point, I think we're going to reverse all the way up to 511 here on the Qs, and I think it's a direct shot. It no longer, I no longer think that we're going to have a flat pattern. I can't leave it, I can't take it off the table, but I think it'll be more probable if we get above this 62% retracement that it becomes more probable that we just directly make new lows and we continue the trend downward. SMH. So far, if this is an ascending triangle, a breakout. Otherwise, you can draw it as a wedge. This is the bullish look. The bearish look is a wedge. That's what makes a market, y'all. Everybody has a new look. Now we have a beautiful trend line on IWM. So there's no denying that this has a beautiful wedge forming. So this tells us that this move is just about done. Now it can keep riding the wedge as long as it needs to. Maybe it goes up to the options expected move, or even start to break out from the wedge. But so far, this is just, it's holding very well, and it tells us that there's a breakdown imminent. DIA. I tried to leave a flag up here. It's just really ugly. So maybe again a wedge within this pattern ABC. It still looks the same. Or if you're bullish, here's your ascending triangle, and we're starting to hold on to that. VIX. All right, the VIX still in this wedge here. Do we close the gap? Not so sure, but if we get a gap up tomorrow, then we're likely to continue this lower and close this gap, and that could still be well within this wedge here as well. And so when something like this happens, we had a breakout and we're back testing, but we made a new low. So I'm going to make this wedge larger. You can leave it the same if you want. It's fine. It just tells me that there's a benefit of the doubt. And we break above here, now we have a new breakout. All right, that's it, you guys. Thanks for joining us here at OptionsTender. Don't forget to like and subscribe. Thanks for all the support we've had here. Good luck trading. We'll talk to you tomorrow.